Second. There we are. We should be able to hear me now loud and clear. Hope you're well. It's Friday. It's the end of the week, bizarrely. Uh, but we are obviously start of the new calendar year, new financial trading year. Start of many trades tonight, potentially for me on an end of day basis, but we'll see. We're here to trade the US Open. I had a trade earlier. People have asked me to actually do it live on the platform, this Trade Locker platform. So here we are. We were short here on this. Long here on this trigger here. We were remember this strategy. We're looking for outside of the Bollinger Band first, and then across on the stochastics, the K and the D line here. Remember, our stochastics for this is a mean reverting strategy, everyone, remember. And we use stochastic set for 10, 6, and 3. Standard Bollinger Band setup. So it's 2 standard deviations, 20 candle count back to create our variation, our variance. And we've been moving down from pre-market highs here at 48,292. So we've been moving down since 11, 12. We had a big move across from top to bottom of the Bollinger Band. That was a successful trade from up here all the way down. Then I took that long one earlier before I went off and washed my hair, actually. That was stopped out whilst I was away, and we've just gone long again now on this cross here, and that's currently in the money a little bit here. So we're using 0.1 of a lot. If you're interested, it's we look at this. We'll look at the stress. We look at this the risk setup at the moment. The stop loss is a wee bit too aggressive, too weak at the moment. So we'll let's just open that position. So we'll just move that up, shall we, as we trail up. So we'll edit our position. So we're going to move the stop loss up. It's at 48,150. So we'll move it up just below 48,185, shall we? So we'll make it 48,185, just below our entry candle. Remember, we're scalping this into the open. We're at 25 minutes away from the open. So we've reduced our stop loss up a tad currently. So we've hit target 1. That should have taken some profit up. We're going to let this run. Obviously, we're not taking partial profits on this because we've only got 0.1. In fact, actually, let's just do that. Edit position. Let's just take some of the profits off the table. Partial close position. So we're going to lose. So we'll close half of it, close half of that. There we go. That's how you close. That's how you take half a position off. So we bagged some profits. In fact, we didn't. It's gone back against us where we got in. But that's the way to take partial profits when you've got a whole position on like that. So we're still long at the other half. So let's have a look how that pans out. Anyway, more on that. We'll come back to that in a minute. So the Dow's been nice. Short, long didn't work out. That long did work out, although actually by the time I closed it, it's been a losing position, I think. Let's just check the close position. I think it was after. Yeah, so there we are. We are at 8 cents out on there. So I hope you're well. I hope you've had a look at reviewed your positions for 2025. How you did, how you didn't do, what you could improve. Anything you want to know? Any questions? Please let me know. Somebody's asked a question here. Hello, my friend. Nobody fins this. Anything you want to look at with regard to particular assets, let me know. We'll have a look at it together. But at the moment, we've been we've had the news of the day for me really was the FTSE. We went through 10,000 for the first time ever this morning in exuberance of Friday trading, end of the week trading, beginning of the year trading. So the FTSE had a bit of a US type stock market 2025. We were up 20%. Look at the weekly chart on the FTSE there. We were up, there's the beginning of 2025 back here. So we were up 20% on the year for the FTSE. That's, it was a miserable 3 and a bit % last year. But UK value stocks in particular looking a bit more attractive to overseas investors in particular. Is it a sign of the turnaround or the green shoots of recovery in the UK? Far too early to tell, but obviously the Prime Minister and the Chancellor in particular this morning have jumped on that 10,000 break, and she was posting stuff earlier. So over 10,000, that's the real news of the morning. Scotland is still on a public holiday today, so the Scots certainly know how to celebrate New Year, and it's still a public holiday in Scotland. So England and Wales are back at work. Most of Europe is also back at work today, but very, very thin volumes. I guess the city desks will be, the big banks will be very thinly monitored with some tight restrictions on everybody. Markets, schools, and all the rest of it go back here in the UK on Monday. Obviously, my Orthodox Christian friends, it's a big holiday on Tuesday, the 6th, for Epiphany. So things back to normal in Europe, middle of next week, certainly. The US only take Christmas Day as a holiday and New Year's Day. And again, the US will be back to work shortly. So that's why we were trading the Dow this morning in these opening the US open markets. But let's just go through where else we are. So Bitcoin 89,000. So the gradual recovery in Billy Bitcoin continues. But as you can see here, we're still very much a sideways action for the last week or so for Bitcoin. This is the last 7 or 8 weeks. This is the weekly chart here, guys. This is so it's a 1, 2, 3, 4, 5, 6 into our 7th week of sideways action. Support at 85,000. Below that, as we keep saying all the time, that 80,500 intraday spike we saw in the middle of November, and then the significant low of 75,000, the psychological 75,000 that we went down to at the end of March this year, last year. I'm saying this year, last year now, isn't it? 2025. So sideways action. The daily chart, similar, even more of an extended channel. There's our 92,000 level, 95,000, the top of the Bollinger Band. I can be saying this for days now, but we did this for gold. Remember, we did this for gold. We monitored the sideways action, and when it broke, it just ran and ran. So that's the beauty of markets. That's the beauty of watching markets over all these years. You know, the longer things go sideways, the bigger the break to either to the upside or the downside can be. And as traders, we don't care. You know, we want to make money, whether we're making money going long or making money going short. That's the key thing. The interesting thing here for me as well, you can see the compression in the Bollinger Bands. And remember what Bollinger Bands are measuring. They're measuring volatility. So as the compression, as the Bollinger Bands get closer together, the less volatile the asset is that we're looking at. And as you can see here, as with a balloon, if you like, if you press it in, you know, the pressure builds up, and that's what's happening here. We're seeing a bit of a push up. And for the bulls, the Bitcoin bulls amongst us, we've edged over the 20-day moving average now for 1, 2, 3, and we're into our 4th day. Just about. It's a very weak break, very weak candle bodies, and very weak, relatively weak volume as well. So watch into next week. See if indeed, perhaps over the weekend, any burst and attack of the 92,000 level will be interesting. But as we can see here, since this slide down has been going on from the all-time high here at the beginning of October, we haven't been able to hold 92 for any length of time. So that's why 92,000 is my key upside indicator for Bitcoin. Yeah, exactly. No, but you're absolutely right, my friend. Yeah, 92, you see there fairly clearly. 92,000 for me is a big line in the sand, and then 95,000 and a significant break, a significant bodied candle break, whether it's on a daily basis or certainly on a weekly basis. As we saw on the weekly candles, that weekly chart before, we should go back to the weekly chart. Lots of sideways action there, and the daily is just an extension of that. And if we come down the time frames, you'll see, the 4-hour time frame is more of there's more volatility in it, but the same revisions, the same zones are still in play. Really, these daily resistances up here at 92,000, 95,000. This support through 85,000 for old Billy Bitcoin. But yeah, 92,000 certainly. But as you can see that on a 4-hour, it doesn't want to, does it, over the Christmas period? 90,000 has been the line in the sand. over that our Christmas period here in UK and in the West. So we'll see. Stochastic still pushing up there. So that's our cryptos. Energies, obviously, all sorts of politics flying around. Obviously, the situation in Iran is gathering more global attention. I think it's 6th or 7th, 8th day now of protests about food prices, energy prices, bizarrely, but particularly food prices. Not just in Tehran, spreading across some other cities as well. The government has said they will take people's objections into account. What that means in speak in real terms, where we'll see what sort of crackdown there is there. But yeah, it's an ongoing protest, and people really scrimping and scraping in Iran. Sanctions really biting average Iranians. Remember, it's a big old country geographically. It's a big old country population-wise, and watch that carefully as we go into 2026. So, as far as the oil market's concerned, we're at 56.88 out of that channel again. Out of this support area from this is we put these on last week, didn't we? So the upside break over 58, breakdown under 57 is happening. We're at 56. Remember the 55 zone, which we went to here on the 16th of December, is lots of fresh air here, as you can see on this chart. So big down candles rather than up candles here in this 4-hour time frame. So energies, oil, again in low volume trading, low liquidity, pressured to the downside. New year really kicks off next week. Dollar continues to recover. Dollar had a really bad year last year, as we explained last week. I found a really good. Let me just find some of the. I was trawling through Twitter today. Interesting. Nobody's saying here. Check oil in monthly time frame. It may fall till 45. Indeed. Yeah, absolutely. Let's energies. Let's go back to WTI. Let's show that for everybody. So there's the 4-hour. Let's go to the daily. So that's the zone we were looking at. Again, I couldn't get excited on this, but the pressure, as you can see, remains to the downside. We can't get over the 20-day. These are sort of Christmas range we've been in. These two pink zones here. There's that 55, but as nobody's saying here, if we go to the weekly, sorry, step up to the weekly. We'll go up in ones and we'll have a look at the monthly in a minute. The weekly, there's that key 55. But if we zoom this up like this, and we go to the monthly, you can see very clearly, even though this chart here for TradeLocker only goes back to March 2023, you can see clearly on the monthly trend from that big sell-off in April last year, we were already, we'd been under the, under the 20-month moving average here from July 2024. So it's been in a downtrend for a long time, and nothing's really changing that. This is a consistent downtrend. So there we go. August, September, October, November, December, and December. So we closed the year at the low of the year, at the low of multi-year lows, and I can't. Not on this particular chart, I can't actually say you're 45, but the trend remains down. There need to be some significant changes in the geopolitical setup and supply, and from the supply side, because there's a big glut, and then the demand side. But Saudi Arabia, the world's biggest influence on oil prices as far as supply, they're determined to hang on to market share, so they will cut prices at a bit of a whim, particularly to their Asian customers, to maintain market share. Obviously, the situation in Venezuela, they're not a major supplier now, but it's the reserves in Venezuela that's absolutely key. Situation in Iran, again, not a major supplier at the moment because of the sanctions, but oil is getting out there. Russia situation, so the potential is, the supply side isn't going anywhere. So oil remains very, very much in a downtrend, and there may be intraday, obviously, hikes up and down, but the trend is biased to the downside still on the oil market. So I hope that's answered your question nobody, my friend. So I say forex. I was just going to look at the dollar. The dollar's continued to have a good day. So or having a good day again, I should say. So this is from our high as we went to 118 just before Christmas on the 23rd, and on Boxing Day 24th, we spiked through 118. It's been selling off ever since. So 1, 2, 3, 4, 5, 6, 7, 8 sessions since the all-time. It's not all-time high. Since we went over at 18, we've been buys downside. We've had one up day and 6 down days. Again, very thin volume, so don't get too excited about it. But the key thing is we're closer to 117 now than we are to 118. So 116.85 is that the first key fib level. 23.6 is a fib level, but 38, 5, and 61.8 are the key ones. To the downside sits below 117, so 116.85, as we said last week, is the next big support zone for the euro. Can the dollar continue to accrue, or is this just end of year balancing of the books? Remember, we've had a massive downtrend for dollar this year, and I was going to find you something I downloaded earlier, so just bear with me a second whilst I get out a folder, some screenshots I took earlier, and it was from, it's this one. This is the key one, like this one. Dollar logs worst year in 8 years. So there we go. So the dollar index, this is from Bloomberg. This is a screenshot I actually took from Twitter from a guy called Steve. Steve, his name escapes me at the moment. But I'll reference him in a minute. But this is a screenshot from Bloomberg. So the worst year in 8 years for the dollar index, off 8%. So the dollar across the basket of major currencies. So the dollar index, the US dollar index, as we normally refer to it, is the 6 currencies. Currencies. Euro takes up 55% of that basket of 6 currencies, includes the Swiss crown. The Bloomberg dollar spot index here is a wider basket of currencies, so much wider than the 6. I can't remember actually off the top of my head how many are actually in it, but it's a wider measure of the dollar against a broader range of emerging market currencies, for instance, and that is down 8%. The dollar index itself, the 6 currency one, was down about 5 and a bit percent, I think it was. But yeah, the key thing, it's worst year in 8 for the dollar. Obviously, we've had this worry about the debt in the developed market economies. And that happens every year. We all have this review, but it just, the issues keep getting kicked down the down the road. But obviously, this year, the key thing this year, excuse me, has been the tariffs. Trump's obsession with tariffs, and the turning on its head of world trade. So that the sort of globalization we've seen since the Second World War has come to an abrupt end as far as Trump's concerned. But he's, the flip side, there's only 3 years left of the Trump presidency, some would argue. So look beyond that as we get into 2026. 2026 could be a sticky year because of the midterm elections at the end of the year. However, on the positive side, if their mantra is to be believed and their economic outlook is to be believed, they're saying there's not going to be the impact on inflation. Inflation's negligible for the US, and therefore we're accruing all these massive tariffs, and we can give them back to the people. We can cut taxes, we can give money back. But those tariffs are getting paid by somebody, and they're getting paid by US companies. So what the earnings numbers start to look like into the second quarter of 2026 will be key. If indeed the tariffs are having the impact that many of the doomsters are saying. If it isn't, if the Trump mantra is correct, we could see another step up for the US stock markets, the US asset bubbles. Housing could get a bit overpriced again, and things like the broader growth in the stock markets away from the tech boom could lift things. Obviously, the worry on the flip side is that there's no return yet on these massive eye-watering investments that companies are throwing at AI. Will the power infrastructure sustained? Will the investment in electricity in grid keep a pace, or can that investment keep running? And what is the return at this massive trillions and trillions of dollars that are being invested? When is that return going to happen? There's no doubt, obviously, AI is having an impact on productivity and on certain sectors, and on all. Well, it will eventually have on all sectors. But as far as affordability is concerned, for the next 6 months, or the next week, or the next month, for your average American, where is it? And again, I'm saying the average American because that's what's driving the market. But obviously, that's a global story as well. So anyway. More on that, I'd say keep an eye on all of that as we move forward. But the dollar, I say, had its worst year in 8 as far as the currency markets are concerned. So some more screenshots in a minute. Another one I really liked was this one. This came from I think it was Aventis. So yeah, Aventis reaches 100 billion assets under management. This was their screenshot for the year. This is again data from Fact Sheet. As much of 2025 sits on one page. I think it's really, really nice. This is the S&P 500. There's the April Nadia as Trump announced those tariffs, and then again, so if you read through some of these, you don't want to do it now. But if you want a copy of this, let me know. I'm happy to send you one. I'll find it yourself on Twitter or X, I should say. But the interesting, when you scan your eye over here, it's all about inflation and jobs and the swing in Trump's announcements about tariffs, whether they're up, whether down, as well as obviously all the political things that were going on. And then we finished the year with the man himself, Warren Buffett, actually stepping down as CEO of Berkshire Hathaway. Still going to be chairman, but at 95, I think he is. Stepping down as CEO of Berkshire Hathaway. So anyway, more on that a bit later. Right, there's another question here, and it comes about everyone's favourite, about what's your view on gold for next week? Well, I'm going to say why next week, but let's have a look at gold. Gold remains bid, basically, at 4,368. It's certainly well bid. Huge sell-off. That was profit taking, really. And it was a lot of technical stuff at the end of the year there. There was the physical market and the derivatives market, the paper market, all coming to roost. So huge candle. Can't be ignored. Huge bodied candles cannot be ignored. Like we saw here, big bodied candle at the top when we first got to that 4,350 zone. Big bodied candle there on the 21st of October, and it followed through for a dip down. But 4,000 was more or less held, wasn't it? It took a while, flattened out, and then here we are into something like our 12th week over the 4,000 level. 4,200 is the current big support zone, sort of down here. Where's 4,000? It's under where we got in on 10 of August. So 4,200 is the big support zone on this daily basis. So that's a significant candle, obviously. But interestingly, again, the 20-day moving average is held. The midline of the Bollinger Band is held. So from algo trading, from people that use that sort of indicator, that's seemed quite positive. The low yesterday took us to 4,275. So at the moment, it's looking okay. Going into next week, we've got this flattened top now of the Bollinger Band on the daily. 4,550 was our intraday all-time high over the Christmas days period, basically. So it remains okay. It remains bid. There may be some more profit taking. So going into next week, support, or the issue I'd be looking at would be that intraday low there at 4,264. That would be on my chart going into next week, note blue. And then below that, the 4,200 levels, as I said, and then the bottom of the Bollinger Band there at 4,130. We don't want to be seeing that sort of zone, do we? Because look what that corresponds to. If you look to the left, you can see that corresponds to the low of that big sell-off day on the 21st of October. Big-bodied candles are much more significant than small-bodied candle, because it means, the sellers are in charge, and that's why I'm down there. Sellers are in charge, but was that enough profit for the end of the year? We're mounting the new year. Technically, the new buys, new churns, what's going on as we start the new year, but it's relatively low volume at the moment. It'll pick up next week as everyone gets back to their desks volume wise. But let's see where we go from here. So that's the key support areas. So going into next week, the 20-day moving average 20. Let me just reiterate. 4,323. So call it 4,325 for the sake of round numbers. The 4,200 is 4,220, and then the bottom of the Bollinger Band at 4,128. Obviously, it's quite wide. Obviously, to the upside, we'd want to get back to this 4,500 level to the upside. That's going forward. If we look at the weekly time frame, less of a fret, if you like. So we've been very, very positive. The 20-week moving average is all the way down at 4,000. That was the first big sell-off week we've had since this one we talked about before in that daily time frame from the 20th of October. So that's not unusual. The unusual thing is the strength of the rally we've had and the fact we've burst out the Bollinger Band and we're still very much at the top end of the upper part of the Bollinger Band. So there may be some more profit taking next week. January, February tend to be relatively positive for gold historically, seasonality wise as well. So at the moment, there's nothing triggering on any of my systems, I don't think, for gold, but I will let you know. Note Blue, my friend, if you follow us here on the on our Discord group, hope you're all on Discord. All my end of day trades I put here on Trade Chat and share them here with you. And just while we're on that, I'll come back to show you the how we did last year on that group. So I hope that's answered your question. Bias to the upside, basically, because the 20, to answer your question in short, Note Blue, is really that 20 period moving average is key. That's that setup. If we look at the other layouts I use, so the MACD and the SAR on the daily, the parabolic SAR is flipped because of this big bodied candle, and we've got a cross on the MACD. So this, on an end of day basis, this would have gone short. This strategy would have gone short there on the 30th of December. Obviously, bearing in mind the low volume and low liquidity, so just be careful. So that system, this is a trend following system, as you can see here. It's been long here, and again, this one uses the MACD crossing the the MACD line and the signal line, and the flip of the parabolic SAR. So that on an end of day basis has actually gone short. Note Blue. You're a dog. I've got two dogs, Royal Monkey. One is nearly 15, bless her, Stella. She's 15 in February, and Stanley. Stella and Stanley are our two dogs. They drive me mad. They get walked once or twice a day. Stella now has to have a walk late at night because she's quite old and incontinent. But before that, we've had cats as well. We had a cat for many years called Orifice. And there's a story behind that as well, but I'm not going to explain that today. Royal Monkey, I hope that answers your question. Obviously, it's the year of the. Is it the year of the tree? I don't know. Actually, we were talking about that. I've just got my. Can you see that? That's my new calendar on my new desk diary or pocket diary. Call it what you will. For 2026, bought in Japan. The beautiful Nolte notebooks, absolutely beautiful piece of paperwork, absolutely gorgeous. But anyway, that's more to be filled in for this year going forward. So yeah, probably a dog. Who knows? Let's go back to what we were talking about. Yeah, gold. We were talking about gold, weren't we? So gold on the MACD would have gone short there on the 29th on this particular on the MACD and parabolic SAR setup. The crossing EMA strategy is probably still well, it was obviously long. Then it's short, and then it's got stopped out as it come under the green, so it would have got stopped out there at 4,395 as it went through the 9 period moving average, and now nothing's happening. There's a bit of a cross down, interestingly. Here the 5. Let's zoom that up. There you can see the 5 cross from above to below the 9. here. So this is the 5 EMA, the green is the 9 EMA, and the red one here is the 21 EMA. This is what I'm talking about up here. So we're looking for a cross on the two. So that was the first cross. So the blue cross is like heads up, you may be looking to go short, but we closed yesterday right on the 21 EMA. It didn't break below it. We weren't below it, so it didn't trigger an actual short position. So it's bounced a bit today. So it's biasing to the downside because of this huge engulfing candle on the 29th. But bear in mind the volumes. I know we can put volumes on here. Bearing in mind the volumes on these aren't all what they should be. Volume. Just put the volumes on. So although it was a big sell-off candle, it wasn't a particularly massive volume, was it? That's what I'm saying. It's treated with a relative pinch of salt. So that it might have been an opportunity for buyers as we didn't break the 20-day moving average. But again, because it's on low volume, be wary of that. It has had a fantastic run. Don't get too greedy. But as we can see here, our last leg down suggests an extension on the fib to 4,675, as we mentioned at last week. So whether I'm a dog person or a cat person, real monkey, I just follow the trend. I follow my rules. So that is looking to go short, but isn't short yet, that particular setup on an end of day basis. So that's the MACD and the VWAP. I don't know if I've got any. Yeah, the VWAP on a, not still the 5 minute. That's under its VWAP, but the VWAP is not really relevant on this daily chart. But yeah, it's moved lower. There's that leg. There's the support at the first fib level. There you can see it's 78.60, which we bounced from. So that's not saying anything, to be honest. So one's short, one's potentially short, and the one we were using was our stochastic and moving average. That would have also triggered short on. Let me look. That would have triggered short, not there. It would have actually gone short there. So that's actually short as well. On an end of day basis, but it's ran into its first target. Its first target was really close, which is here. The second target would be down here. So yeah, it's at that time of the year. So just be careful trading this output. Let the volumes come back. I would suggest let the players get their feet under the table before you jumping in with any strength, my friend. So let's just pop back. It looks like our long was stopped out again. Was it the Dow? We trading this? What have it got? There we are. So we were long. We were long the last one. We were long, weren't we? Here. Got to target one, and the second, it's took us out on the downtrend. So first one was successful, although we actually lost 8 cents, and the second one was stopped out as well. So we've had 3 losing trades out in the whilst we've been with us with you this afternoon at the moment. So as we come into open, so the open has pushed us lower, as you can see here. But let's. So that was our high for the day. So we've been down from that. So the buys really would have been short, even though we went. Did we go long? Can't remember now. Yeah, we are actually going against the trend by going up, weren't we? So we've been stopped out going against the higher time frame trend because we'd rejected the. In fact, let's just put that over there. We'd rejected the a pre-market high, and there's a big opening. A move lower, so futures were higher here. So this is the where we are, start of the day. So start of the day is here. So this is the opening trades this morning. So I'll just put that on. Should have done all this at the beginning before we count. So that's our low of the day. That's our high of the day. We'd rejected the high there, so we got that short down. The 3 trades, or 2 trades, 2 trades we've taken were losing trades. The first one was sort of break even. The second one was a lose. The second half of the trade was a loser because it got to the. We weren't watching this, so our stop losses well, down here, wasn't it, somewhere? So it's gone down. So the opening is actually continuing the trend to the downside. So it's a continuation trade. So that could have been a short entry here on that after the opening and neat opening period of trading. So if we go up to let me just explain what I'm talking about. It sounds a bit complicated, isn't it? There we are. There's the downtrend that we've seen on the hourly time frame. So let's go up to start with the daily. So the daily time frame had been rolled over. So we were the high on Boxing Day on the 26th has been followed by consecutive lower days, and we were down again yesterday, relatively significantly and under the 20-day moving average. So on an end of day basis, that was quite a significant close below that key 20-day moving average. So those 5-minute short-term trends were very much against the higher time frame trends. As we come down to the 5 minutes, you can see as the daily is down, the 4-hour has been down and in the under half of the Bollinger Band since that 11 o'clock candle on the 29th. So that's been moving lower as well. And the big candles were negative ones. This one isn't finished yet. Obviously, it's just opened. The hourly candles, come down to the next time frame, were also moving lower. Just set that. Had been moving lower since these highs on the 29th, 26th, sorry, Boxing Day, and then moved lower. All under the in the under half of the Bollinger Band. Bit of a bounce this morning, rallying up. There's our daily high, pre-market high, and we've opened quite negatively, and we haven't been down here. If we look to the left, since before Christmas, the 19th of December, we're testing into 47,898. So we are under 48,000 is the news here on the derivatives chart. So the trend is to the downside. So those short-term bounces on the 5-minute chime were just that, which haven't proved successful. So up resistance, up resistance, and there's that closing of the stop loss on the second position. So this would have been after the opening flurry. And the widening of the Bollinger Band there. You see there's the volume would have picked up as well. That's would have been a continuation trade short position after the failure of the two long positions. If you see what I'm saying. So that looked like it was going to work out in, and that's what we got in there on the second movement of it. But there you can see it's better described there. It's the 20 has proved the resistance. So that although the stochastics continued to move up until the big sell-off on open, it's the risk of trading the opening trade to the downside. That's then going to move down. We'd now perhaps look to go long, but with the caveat that the higher time frames are still short, and they will obviously, this is the 5 minutes. So although if we go down again to the 2 minute and the 1 minute, we would have been that would have been a short there. No, that would have been filled there. And then that would have run off really quickly, and that even this 2 minute trend isn't looking to turn around just yet. So the 2 minute is still short. So it's the momentum of the opening trades 15 minutes in are still short. So the other key thing, well, not key thing, and the other thing that might move the markets at the moment is we have some economic data. The PMIs, the manufacturing PMIs, are out in a moment. Where are we? We are the second. There we are. And we've got Canadian PMIs were a little bit better than expected, actually, at 48.6, unlike most of the rest of the world. You can see here in Europe, with miserable manufacturing PMIs. Remember, anything under 50 is contraction, anything over 50 is expansion. So these numbers have missed. They're already in contraction, and they're worse than expected. Unfortunately, the UK one is just about edging, still in expansion, but it was a decline from 51.2 last month to 50.6 this month. We've got the US manufacturing number, the final reading, in a minute or two. a minute and a half, in fact. So have a look at that and see how that impacts the markets. We'll come back to that in a minute when it breaks. Okay, so sorry, let's just bring that back into that one. There we are. Any other questions, guys? Let me know. Let's have a look. Let's look at it's affected. The forex market, the euro was again, trend was down, wasn't it? It's the 2 minutes. Got the 5 minute. The trend had been down, so that was a long trade there. It didn't work out. Very choppy. The hourly trend has been down this morning. And then we found a bit of a floor at 17.20 for the euro as a floor this morning. This current hourly candle, it's still got 15 minutes to run, is the best in the last 4 or 5 hours. So we've been as low as 117.13.4 today, but the low has got lower during the day, and we're ticking up a bit now, just ahead of the US PMI data. So I'll just go back to the 5 minute time frame. We're in wait and see mode on the euro, and that should have dropped by now. It hasn't really moved the euro at all by the looks of things. 45 is when it's come out. So let's just have a look what that looks like. 51.8, so it's smack in line with expectations. Remember, the final reading means it's like the final revision. So the primary readings are the ones that move the market most. So the fact that the UK final reading was worse than previous one is quite negative as well across Europe. But the US one is held up at 51.8, and again, as you can see, the US just in expansion mode, but still miserable at 51.8. But it's still better than anywhere else. Spain, Italy, France, Germany, and UK, just as those as examples immediately. And they're all sort of calculated more or less in line with each other. Some of the US calculations sometimes going to be a bit squished from other countries, but certainly the US doing the best there, 51.8, although it's pretty miserable, as we've seen with the Empire State and the Richmond and Philadelphia manufacturing indexes. So the euro 117.27 at the moment, hardly moved on that, in line with expected data, as you might expect. And gold, let's just finish with gold before I wrap up, unless there's something else anyone wants to have a look at. Continue to decline, 4.356 at the moment, and on an hourly basis, we've had a relatively good rally today from the big sell-off. We went to 4,400, and we've ran into selling at 4,400 today. We were big down our last hour, and we're continuing to move to the downside as I speak. Okay, so anything else? Anybody? We'll update on the Discord group, the numbers and the data for 2025. I haven't actually done that yet, so I'll do that. I'll do that now here on the chat, under the trade chat, and I'll copy it to the general chat. And a lot of you are not really interested. I've passed my 10k flex challenge, but I couldn't find any link for funded accounting, including activation fee. But Forex King 09, Christian or one of the gang will get back to you. Forex King, don't worry about that. They'll be on to that straight away. You might have to open a ticket for that. But trade chat is where I put my trades. And what I've done on an end of day basis, I also update December, because I haven't actually updated all these trades here, but these were all closed out. The stock markets were also closed out. But I'll update the final week of 2025 shortly. So if there's anything else, anybody, Royal Monkey, Note Blue, nobody, if you're still here, thank you for your time. If not, I will see you. I'm going to say see you tomorrow. It's Saturday, isn't it? I'll see you on Monday. I haven't yet had a look at scheduling for the rest of January. I should do that as well when I finish with you here. My phone's gone ballistic. What's going on? Anyway, I'll let you know and see you on Monday. Have a safe weekend. Very good. Volumes will be back to normal come Monday. And if you're watching in Scotland, enjoy your Hogmanay extended break. Take care, everyone. Be safe and welcome to 2026. All the very best, everyone. Bye bye.